All right, ladies and gentlemen, I hope you had a wonderful weekend. It was a wild start to the year last week. It was up 4% only to close lower and outside of the range of Powell. But now this week, we get the CPI. It's going to feed into everything everybody has been worried about, the bonds, the dollar, the reflation trade, and we are going to see if we get any more action and whether or not the bond yields and the dollar are really going to go crazy. So we got a couple of things to look out for. There's even a bunch of other events, even a couple of earnings. We're going to go over all of that. I have the plays, the keys, all that good stuff. But what I'm going to start with, a bunch of pretty pictures. We need to go all across the world. We're going to hint at what you're going to be dealing with this week. Then I'm going to go over the keys. We really have to talk about the bonds today. And please remember what happens after you get crazy large years, aka 23 and 24. We really got to talk about something there, and then we're going to close it out with the plays, the JP Morgan Health Conference, and all of that. So what I need from you, thumbs up, all that, like the video. Did I already tell you this? YouTube.com/stock market. You know we're live Monday through Friday, 30 minutes before open. Yeah, it's right there. We'll see you there, even for the data. I'll be there early, but run it, baby.
Working to the couch, it's the 2020 election. Live in the hills, but I still get a spread. Started with a live, but I still reinvest it. Feel how I feel, then you feel like a blessing. I just want the lesson, I just want protection. I'm up and I'm down, but they sound like progression. Farming never plans if he waits for perfection. Finger to the down, hold it.
But right off the bat, we're going to start here with Europe because I'm going to talk about the bonds next, and that's going to be a big focus of the video, but you will hear from Europe, France, and Germany this week. And remember what is going on with the dollar. Even the Fed on the minutes, they said that the dollar is getting stronger because the trade-weighted dollar, because of the interest rate differential between us and other countries. But what I want to put into perspective is that the United Kingdom right now is not doing good. And to start off the year, the yields are higher and the sterling is doing worse than when you had that freak out with Liz Truss. We were just talking about it and we were bringing this up, and I told you guys to keep an eye out for it, but to put it into context here, it is actually worse, and I don't think this is something we can ignore. Now, granted, kind of like the banking situation, maybe the markets are better prepared after there's a blowout, but in general, this should be highlighting to you right now the dollar in kind of the like middle ground or Grim Reaper knocking on the door of the wrecking ball stage, because we are watching this all over. You're seeing the dollar bond yields. You are getting these wild once in every so often type moves. And now to start off the year and even coming into this week, the UK is at one of its worst points in terms of bonds and the price of their currency. So that is chart number one. Then chart number two, we are going to come back to this, and I really want you to understand this chart. I even showed this to you guys at the end of last year, so if you have been following along, this isn't really that new, but people are talking about this once again and keeping this at the forefront. And what you have to remember is that the amount of years in history where we have had back-to-back positive 20-25% moves on the stock market, that is very rare. It has only happened about 5 or 6 times. 2023, 2024, that was your latest instance. Now, why do people bring this up? Because the following 2 years, there was only one real instance where you didn't get a major move. Other than that, the following 2 years are usually gigantic as well. And now that's important because, I mean, we have a lot of things happening. You're looking at the markets. I don't know. Do you want to make or lose a lot? I mean, this should be kind of important. Look at these are big numbers, and this is kind of the imminent future. Now, why people are looking at this, because when you do really break everything down in terms of having a good or a bad year, the bonds and what the treasuries do, that is going to be important. So we're going to dive a little bit deeper, but Bank of America, who was it? I think Michael Hartnett. I was going to say Morgan Freeman, but that's an actor. But that was one of the analysts for Bank of America. They were starting to bring this up. And again, it feeds into what we've been seeing with this whole drama around the 10-year at 5%, because so far the bonds have not done good to start off the year. Even last year, it wasn't good. So mostly it's going to be if the bonds do bad or good, that will essentially determine our fate over the next 24 months. So that's why I keep bringing it up. But that's your second pretty picture. This one, I mean, it's wild. I'm actually going to talk about it on the play. I can't believe it, man. But let me put it this way. Donald Trump talking about Greenland is not as funny as you think it is. Okay, I'm laughing right now, but because I'm like, okay, you think it's funny political trolling, but what would you say if I told you Wall Street is talking about a play on this, i.e., this will lead to more strengthening of the dollar, and now people are talking about a race for the Arctic in terms of like energy and other shipping routes. So yeah, Greenland and all of that, there's a dollar trade, and even some Denmark stocks are moving off of it. So keep that in mind. But I thought this was a good, pretty picture. It was from Bank of America. They brought this up over the weekend. So there was that. Another little fun fact, and I actually thought this was very interesting because no matter what you think has happened to start the year, I mean, this is a very weird dynamic, especially when you see everybody freaking out about the dollar and even the bond yields. But as far as the dollar, believe it or not, to start off this year and even this last week, you have had the biggest inflow to cash since April of 2020. So that was after they had an emergency cut. Now, some people, you could argue maybe the Fed's making mistakes, but at the end of the day, that really stuck out to me because it's kind of odd, but it does make sense with some of what we've been seeing. And again, that shift we've talked about with 21 and 22. So maybe some people are worried, but now this is just where it gets all weird, because at that same week, you've also had the biggest inflow to treasuries, even though the treasuries have been absolutely blown out. And again, you're worried about the treasuries. So it's a real head scratcher there, but the point is to start off, I mean, a lot of people are in cash. There's been a big move on bonds, but bonds, the dollar, and I think how that's going to factor in everything else, I really think it will be our theme of the year, and you're probably going to hear about it nonstop. So those are your first pretty pictures to start. I do actually have a couple of other. I'm just going to go through my Twitter here. One, there was a Kodak Black music video with Richest Man in Babylon. Chad tagged me. I thought that was amazing. This one, you have the 5 largest stocks in the S&P 500. They now account for 29% of the S&P 500. That is the highest concentration since the 1960s, and that led to a pretty bad performance. So that was a chart I wanted to show you. Uranium. So even though uranium stocks don't reflect this, last week there was a big deal with even Constellation. They've made moves, and even then after CES, people once again getting excited on AI, but I don't think the uranium prices reflect this as much as spot uranium is now actually soaring. So that was a little fun fact. And then finally, just to talk more about the market breadth and how we've gotten some weird volatility over the last couple of weeks. Again, even remember, to end the year, it was pretty bad. You still have negative breadth, and right now you have about 30% of the S&P 500 trading above its 100-day average. I guess it's since like last September was the last time we saw that, or like not 2024, like the one before that. So yeah, all in all, I don't think we're out of the woodwork, and the market is still waiting for direction. And again, just don't forget, we are still near highs, but you are 5% off of the top. Some names like even Apple have kind of corrected, but we still have a lot of uncertainty coming into this year, and that's why every day and getting through these milestones are going to get really important. So now to get to your first key, like I've already talked about here in the beginning, I showed you that chart. The first thing I want to start off the week with is that the bonds are the secret sauce. We talked about this a lot last week. We brought up the dollar. I'm sure even if you looked anywhere else in financial media, you heard people talking about this 5%. Oh my gosh, what's going to happen? Even 21, 22, a lot of people were talking about this. So I'm glad I got that to you timely. But now I want you to start off this week with another perspective. Are the bonds a death sentence to bring the market down? In some elements, they can be. And that's what we discussed last week. And that's what people are kind of getting worried about. But it could play the other way. That chart that I showed you guys to start off the video, this is where people are talking about it. It's not really a one-way street. And the fact of the matter is, the other way you could be looking at the bond market now is that if you wanted to avoid any major reversal for 2025 or 2026, all you need is the bond market to rally. So right now it may look scary. It was already kind of weak coming in with the election and all of that. We'll see what happens if it does get bad and how the market plays out. But also, even if there is a problem or if there isn't, the fact of the matter is, over this time period, remember, we're just starting the year. If the bonds do find a way to recover, that's pretty much going to be your life jacket to prevent any major reversal or in the market, or at the very least, that's what people are talking about. But I like this idea, and why I'm saying this is because I want you guys to understand both sides of this. I don't think you should be scared of the bonds and looking towards TLT to only produce one outcome, as much as you could look to it to kind of just say, hey, it's a very, very sweet spot where if you know that if bonds break or don't break, it's going to create a very, very big swing in either direction. That will be more valuable to you than just picking one round and saying, oh, the bonds will have to lead to a market crash, or no, the bonds are going to lead to a market rally. It's just, no, we could be patient, watch the data, watch the Fed speak, and see where it goes. And that's what we talked about last week, and somebody even brought it up. They're like, oh, nobody knows where the market is going to go. I kind of disagree with that. I think I know where the market is going to go. I know I may sound very crazy, but then again, a YouTuber saying he knows where the stock market is going to go, come on. But at the end of the day, I know where the stock market is going to go depending on where the bonds go, but I don't know where the bonds are going to go. And I think a lot of people right now on Wall Street, they don't know what the bonds are going to do. The data, Powell, Fed, earnings, who knows? I mean, does Trump take Greenland? Does he buy something else? There's so many possibilities. So if we know what the bonds are going to do, we will know what the market is going to do. And again, people are talking about this, both bullish or bearish. There's a lot of background at these levels that can, give you a lot of confidence that if the bonds chill out or if they break, we should see this type of environment. And now we're just kind of in the early days inching into all of that. So going to keep an eye out for all of that this week. We'll see where it takes us. And now the next part of this week, it's going to be all about the CPI, like I said. So last week we had the jobs report, and remember, beginning of the year, first set of data, even though it was data from last year, but as everybody's getting worried about inflation and rates, once again, we saw that good news, bad news dynamic come into play, and I think we're going to see more of that. Now, with CPI, it's kind of odd because you're like, how do you read good news, bad news? I mean, it's just simple. If the number is low, a bad number, I guess. We want low CPI. The market's going to like that. High CPI, a high number. If you think higher numbers are good, then that would be a bad reaction. So CPI is actually probably the easiest data set to read because, again, high inflation, it confirms everybody's worries. Low inflation, that could help calm people down. And now with everything we've been dealing with since last week in the bonds, this is going to be your final set of data that is going to give you something on the data front that is either going to confirm or deny the inflation worries, and then that's your final 2-week runway now into Powell. You're going to have the inauguration after that. We get to a milestone, and then this will be the last CPI for Powell. I do think you will get one more PCE, which is what the Fed will be looking at, and then we're going to be playing this good news, bad news dynamic and seeing what uncertainty actually materializes. So watch out for that. That is key number 2. And then finally, the only other thing you got to watch out for this week, like I said, maybe you'll hear some other crazy stuff out of Trump in Denmark and watch the dollar, but Japan, we heard a lot about rate cuts, and even the yen. I think that helped the bonds out a little bit on Friday. You're going to hear from a couple of people, and they got even their rate decision coming up, and people are keeping an eye out for that on Friday. You're going to get some China numbers. They're going to announce a couple things, and even then, China has been opening up this year, the worst in almost 10 years. So they have been doing bad. And again, that's part of everybody just kind of getting wrecked with the dollar, not to mention China has their own economic worries, and they have not been putting out stimulus, and I think they're waiting to hear what Trump, and they want to see what he's going to do, and I think Trump is also waiting as well. And then we're going to hear from Europe. You're going to hear a couple of no confidence votes, or I think some updates on that, not to mention the budgets in France, and then we'll see what happens with the UK and all of that. So you'll get drama here and there. At the end of the day, it all just going to boil down to what happens to the dollar, the bonds, and then ultimately the market, and then we're going to have to deal with our inflation narrative. And then you will get a couple of earnings, but confirmation hearings. So even though the inauguration is next week, you will get a couple of the people that Trump has appointed. They're going to be going through their Senate picks, so we'll see if we get any shakeups there. Other than that, though, I think CPI will be the main driver. Other than that, though, the bonds, whether they break and cascade, I really still think that's going to determine all of it. And welcome to the year, my friends. But now, let us get into the plays. So, right off the bat, I think it's going to be a wild week, and believe it or not, last week I only made one play, so we kind of slowed our way into things. But this week, I mean, we do have earnings right after this, but this is one catalyst or one event that I'm going to be looking out for, the JP Morgan Health Conference. So we talked about this a little bit. I think it was SWTX. There was one name that kept moving on these headlines last week. We have that Editas play. That was the one I made at the end of last year, and they're going to be presenting, but let me see. Is it right here? Yeah. I posted a link on my Twitter if you go here, but here's the full list. So here's the full listing calendar. I mean, literally from Monday all the way to the end of the week. There is a bunch of different names. Now, not all of them are going to be announcing data or something important, but some of them, they may come out with a study, and they've been waiting to announce a phase 2-3 update, and they use this conference to do that. So you may get some crazy moves, or maybe we will get some crazy analyst upgrades and downgrades and all of that. So I think it's going to be a major catalyst. Kind of think CES for biotechs. That's what you had last week. So now this week for the biotechs, but that's going to be play number one. Watch out for that. And then play number two, Hershey's. So this one, we've heard a lot about it over the last couple of weeks. Remember, there was the buyout, and they said no, and then they've been selling off, and then they were like, they want approval to make a huge order for cocoa futures, and then the next day, there's a rumor now that the CEO is going to be leaving and that they're going to be replacing her. So I like the CEO replacement news lately. Starbucks, Chipotle, even Intel, a couple other names. It's caused, I mean, either big moves up or down. So I'm going to be watching out for this. I like Hershey's for the long term. I would like it a little lower. I've even been chilling with the long term. Again, it'll kind of make sense with the next play that we're going to be getting into, but essentially short term, long term, Hershey's, I'm going to keep it on my list if it either moves big or we get these catalyst updates, anything from replacement of executives all the way down to other guidance, because it seems like they're shaking things up. I think we may hear from this, but it's the most I've heard from Hershey's in a while, so going to be watching out for that. And then finally, the dollar and oil. So this plays kind of weird because I'm not really saying go and leverage the dollar and go for leverage dollar plays like UUP in a weird way. Like even for the long term, holding your dollar and waiting for a little bit. If the yields are still higher, the dollar, the trade-weighted dollar is going through the roof. By waiting and even holding cash, you got to think about it. If the euro is getting clapped, if you just hold a dollar and do nothing with it, and all these other currencies are getting clapped and you're seeing all this happen, you are essentially benefiting off of that. So I would watch out for the dollar here, and that's why I'm like, I kind of want to see how that plays. Maybe we could make a dollar play depending on what the other things, what happens with Europe and if they get a crisis or anything like that. But quite simply, a little patience here and waiting for prices to adjust if the dollar really stays up. I think that's going to open up the door for a lot of opportunities. And then if we really start to see a worry, even with CPI this week, like we're worried about the reflation and inflation coming back. I mean, even if the dollar stays up or not, I mean, the answer is going to be commodities. If there really is a worry of inflation and the Fed is worried about it, anybody, and we actually see it materialize, oil, commodities, they're going to go crazy. And even now, to start off the year, oil is doing the best. So I think it was like that last year. That didn't last long, so that's why welcome to the beginning. We'll see where it all goes, but this is an area where I'm like, hey, man, I think a little bit of patience, clarity, get through our milestones, and then again, oil and where that comes into all of that. If we're really going to start seeing things ignite, oil, throw that into that bond and dollar trade and commodities, and then before you know it, it'll be March, middle of the year, and then we'll see where reality is at. But other than that, those are the main plays. I did only make one play. This was my first play of the year so far. There was no news. It just started moving. I think it was like an insider transaction. We saw a couple of updates on Friday, and I was like, you know what? I kind of like Estee Lauder. We had a good hit on it last year, related to the China play, even related to the value there. So it started moving. Given the size, I thought there was going to be like bigger news, and the options were cheap. I grabbed a January 100 call, two of them at 3 cents. It went up a couple minutes later to 10 cents. Sold one of them back, made it free again. Still got the small plays, making it free to start off. So I like that, but no real crazy idea. There was a lot of other news updates. Again, Hershey's on Friday, Estee Lauder. There was an update from like Apple analyst in China saying it'd be slow, and then there was even a stocks for like fire prevention that we were even talking about there. So a couple of those names, we'll look out for it. Even what's it called? The Rigetti and all the robo names, they died last week after those Jensen comments. So hopefully you watch that video we said. Again, I'd wait on those. I don't have any other plays except making the QS free, and then we will see what happens with the bonds and dollar, and I think that is going to open up the door for a lot of plays. Watch that reaction function, and Chad, that is your watch list, ladies and gentlemen. Make sure Hydrate Healthy ready to go. Make sure post your watch list. Make sure we see you there in the morning. I need the armor on. I need the helmet shining, and I need you to remember your intention. Guide it and make it clear and avoid all of the nonsense, my friend. Set that goal, and I hope you're still saving 10% and add it to the long term, baby. But I'll see you in the morning. Drink that water, stay hydrated, healthy, all that good stuff, and get a good night rest, and horn.